2016 was a tremendous year for the De Beers Group. Across the whole group we saw very, very good and improved performance, so very, very pleased with that. And in a number of key areas I think our performance highlighted some of the key themes I think face us in the future. So we did very well in areas like partnership, innovation and leadership. So very, very pleased with that. At the top line, sales improved across the group to about $6 billion, EBITDA up to $1.4 billion. That's very, very pleasing. That's more than 40% up on 2015. So for us, a wonderfully positive achievement. 2016 generally was a better year, much better year for the diamond industry. The MIDSTREAM performed much better than 2015, and I think largely as a result of the strong and decisive action that we took in 2015 to reduce production in accordance with demand. So the fruits of that tough action that we took in 2015 were seen through 2016. So it was a very, very pleasing year. Some other highlights for us included signing a 10-year sales agreement with the government of the Republic of Namibia, the longest sales agreement we've signed in Namibia, and a testament to our partnership with the Namibian government. We continued to invest very heavily in projects around the world. Gachagua came on stream. We opened it in the course of 2016. Tremendously well done project. We came in at quicker than the time scheduled and on budget, which is a fantastic achievement in the Arctic conditions. Total cost between us and our partners, Mountain Province, about $1 billion. And the mine is in the final stages of its final commissioning. So that did tremendously well for us. In Namibia, the SS Nuyoma, the most sophisticated exploration and sampling vessel ever built. Another wonderful project, came in on budget and ahead of time, and it's currently in the very, very final stages of its commissioning. But I think we would not be doing ourselves justice if we didn't reflect on safety in the group. We had a very good year from a numbers point of view at safety across the group, and the group did very well to reduce all of the key metrics. But despite that, we had two very sad fatalities, one at Jwaneng in Botswana and one at Namdeb at the Southern Coastal Mines. Very sad events for us, and clearly even sadder for the families involved. And we've taken a look at those incidents. We're working very hard on improving our safety, learning from our mistakes, and we're looking forward to a much safer year. Consumer demand for set diamond jewellery across the world in 2016 appears to us have been about flat with consumer demand for 2015, or maybe very, very slightly positive. And in the context of the global economic situation, that's not a bad outcome. In our biggest market, the US, consumer demand continued to grow, and although not all of the US retail results are in yet for Christmas, it seems that consumer demand grew in the US by 3 or 4%, which is very healthy growth. China is our next biggest market. There are signs of a recovery in China in the jewelry retail world, which is very encouraging. We think consumer demand in China in local currency terms was broadly flat, which would mean it's probably a little bit down in US dollar terms. The third biggest market for us is India, and India had a more challenging year. Firstly, in the first half of the year, there was a month-long retail strike, so that depressed consumer demand. And then in early November, the Indian government announced Indian demonetization, which had a negative effect on consumer demand in India. So India had a year which it struggled compared to our other main markets. In the course of 2016, we produced roughly 27 million carats around the group, and that's well within our production guidance for the year of 26 to 28 million carats. So very pleasing that we were able to mine according to plan and produce pretty much spot on what we had predicted we would produce. We see more production in 2017 because the market has recovered from where it was at the end of 2015. And we're currently guiding production for the 27 year between 31 and 33 million carats. So for the rough market, 2016 was a considerably better year than 2015. The decisive action that we took in 2015 to reduce production in accordance with demand, the benefits of that started to flow through in 2016. So we saw that by the end of 2016 in the MIDSTREAM, stocks, both rough and polished stocks, were much more in balance than they were, let's say, a year ago. And very pleasingly, we were able to sell considerably more rough carrots in 2016 than we sold in 2015. So we sold roughly 30 million carrots in 2016, considerable amount up from the 20 million carrots we sold in 2015. So as we start the 2017 year, the rough markets feel to us to be in a nice balance of stocks, both rough and polished. FOREVERMARK, our proprietary brand, continues to roll out very impressively, and it's either the fastest or one of the fastest growing diamond brands in the world. We are now in over 2,000 doors around the world, and we continue to open doors in new markets, places such as South Korea and Hungary, for example, in the course of this year is where we opened new doors. De Beers Diamond Jewelers, our very high-end 50-50 joint venture with LVMH, also continued to grow. We're now in 34 stores around the world, focusing very much on the Asian market, even though some of the stores are not in Asia. And we opened new stores in Toronto and Kuwait in the course of 2016. We continue to focus very heavily on investing in marketing in De Beers. Of course, consumer demand is the sole source of value for us. So we invested more than $120 million in marketing around the world in 2016. The bulk of that remains proprietary driven, our proprietary brands of FOREVERMARK and De Beers Jewelers. But we did some innovative partnerships in collaborative marketing with different people around the world in 2016, which I think is very pleasing and is hopefully a sign of better things to come. So we're a strong promoter of the Diamond Producers Association, an association of all the diamond producers around the world. And we co-marketed generically with the Diamond Producers Association. Their campaign is very strongly focused on millennials and the Real is Rare campaign. So very focused on trying to get millennials to become even bigger purchasers of diamonds. A very effective campaign focusing on some innovative symbols for the millennial generation. In the US, we also partnered with Signet, the world's largest diamond retailer, in the Ever Us campaign, where we both funded marketing activities in relation to a two-stone product. And in India, we launched a partnership with the Gem and Jewelry Export Promotion Council, where together we co-funded a generic marketing campaign in India. So I think it's very pleasing that we've been able to continue to focus on proprietary marketing, but also co-funding generic marketing campaigns, and I see that very much as a model for the future. We continue to push very hard in the fields of innovation because we feel very strongly that companies that innovate successfully are those that are going to win in the future, and we had tremendous steps forward in a number of areas. De Beers Auction Sales in Singapore, for example, continues to innovate across a range of sales products. In the course of the year, they launched a polished sales platform where customers could sell not rough diamonds, but their polished diamonds through our platform. In India, the International Institute of Diamond Grading and Research, we opened a large $5 million facility or an improvement in Surat to allow our customers to quicker, better and cheaper have their goods graded and also tested for synthetics. And speaking of synthetics, we will launch in March this year a very exciting new product for detection of melee. The automated melee screening machine Mark II will be launched within 6 weeks. And you will see when it comes out that it is an enormous step up on the technology that we've used before. So it's a wonderful example of innovation within De Beers. It will be considerably faster than its predecessor and considerably cheaper to use. You know, in the world that we live in today, it's very difficult to predict the future. I think 2017 will be very dependent, performance in 2017 will be very dependent on a number of macro issues. The attitude of the new US administration, for example, strength of the dollar, for example, continued recovery in China, and also the absolute impact of Indian demonetization, which I don't think has been worked through the system yet in India. So there are a number of variables out there which could impact on the year. All other things being equal, we think that the year will be a reasonable to good year. The phrase we continue to use is cautiously optimistic. We think that diamond demand will continue to grow, not at enormous rates, but it will continue to grow along with GDP growth. But as I said, it's very dependent on macroeconomic conditions and geopolitical risks.